I'm going to give you this designer bag if you can prove to me that you know your finances.
Well, let's do it.
How many subscriptions do you have?
Probably just Netflix and Spotify.
All right, it's saying you have 13 subscriptions, which is costing you around $200.
All right, breaking news, suspicious package at Turning Point USA headquarters in
Yo,
Arizona.
come on.
Come on in, folks. Heavy police presence.
This can't be real, right?
In Arizona at the Turning Point USA headquarters. It looks like the bomb squad is at the scene. Oh my goodness, folks. Ultimate fear right here that this type of thing would happen. It is Wackadoodle Wednesday, folks.
And now I'm seeing why people are like trying to steer you away from the Israel like route of this situation. Which, like I said, I don't think it's them either. I think it's just, I think it's just a crazy bull. They got some crazy bull friends, like, you know what I mean? But yeah, that's cause like a bomb threat, bro.
Right
Like,
outside the memorial spot. Supposedly there was a suspicious back.
and this nigga supposed to have a funeral that people could go to. That's no.
Oh my goodness, folks, come on in. Holy smokes. Their wackadoodles are out there for sure. I don't know if this is a serious matter as far as a terrorist putting something there, a leftist, an anarchist, or is this a prank, a troll? Considering what we've been covering, that crazy kid the other day, Ryder Corral, that stomped all over the memorial there. Who knows? Who knows what's going on? So we are covering this case with a report of a bomb, potential bomb, suspicious package. Oh my goodness, this is pretty crazy, folks. All right, so we're gonna get some information about what's going on here at Turning Point USA headquarters. It's crazy. Got the media cameras there, looking at some sort of robotic. I don't know. They had an officer just shortly looking at a device there. Something here. So we'll try to get some understanding of what's going on at Turning Point USA headquarters. The crazy wackadoodles. The crazy wackadoodles are out there, folks. The crazy wackadoodles are out there for sure. Suspicious package. Police respond. We are at crazy things that are happening around the country. By the way, the person that ran their vehicle into the FBI gate overnight, he has been caught. That has broken the last 30 minutes too. That wackadoodle. It is Wackadoodle Wednesday. What in the heck is going on here? So let me get some information to try to find out what's happening here. This is outside Turning Point USA's headquarters, which over the weekend a massive memorial has grown. They've people keep going, paying respect, laying flowers, cards, balloons, pictures. People there just just seeing everything, and it's becoming a site where people that are in support of Charlie Kirk go. I have seen some skirmishes, a little bit opposition there, a little bit, going around there. It seems like the majority of the crowd would drown them out, but they pushed everyone back from the area today, so you don't see people in front of this location. So we're going to get an understanding. So according to the Daily Mail put out an article. Bomb squad rushed to Turning Point USA's Phoenix headquarters as city prepares to host the Charlie Kirk funeral. A bomb squad rushed to Turning Point USA's headquarters in Phoenix, Arizona after a suspicious package was left outside. They're going to know who did this. I mean, if it is actually a bomb. The mysterious bag was spotted outside the nonprofit founded by Charlie Kirk on Wednesday morning. A spokesperson with the Phoenix Police Department told the Daily Mail. A bomb robot arrived at the scene along with the bomb squad official dressed in a explosive ordnance disposal suit, EOD.
Is that the fucking? That's not funny, but is that the bag?
It goes on to say. The street outside the building was cleared out of precaution. It is unclear what, if anything, was found inside the bag.
Yeah, on the supply of cowards and paid criminals. It's
Updates
just
will be given,
retarded, bro.
Updates will be given out as they become available. It also says yellow police tape has been set up at the scene along with the Phoenix Police Department vehicles. The frightening news comes a week after Charlie Kirk, got assassinated. That's been 1 week. And folks, there could be something else going on in Utah too, in reference to those 2 terrorists that got arrested for putting
All right.
a.
Let me see what this talking about. Dollar falls on nearly unanimous Fed cut. Treasury yields and the dollar fall as the Fed resumes monetary easing with a 25 basis point interest rate cut as expected. Dissent, however, was less than many pundits foresaw. Only Trump's most recent appointee, Stephen Marin, voted for a 50 BPS trim. What does BPS stand for? Basis points in finance, a unit equal to 1% used to measure used to measure changes in interest rates or bond yields, or bits per second in computing, which quantifies data transfer speed, which can also refer to business process services, which are services that streamline organizational processes. My fault. Had to finish that up. You convert a basis point is a unit of measure. How it works? You can convert basis points. I don't even know what the fuck a basis point is. We need some business fucking majors, yo. Seriously. Break this down for a brother. Officials' projections are little changed, pointing to a sticky inflation and somewhat weaker employment recovering over the years with improving economic growth. Markets focus now turns to Powell's Q&A at 2:30 p.m. The 10-year yield is at 3.9%, and 2 years at 3.4. The Wall Street Journal dollar index falls 0.4% as the greenback weakens. I don't know what any of this means. Treasury yields. Dollar little change on housing data ahead of Fed. U.S. home building slows, adding support to the Fed cut expected at 2 p.m. ET. Treasury yields and the dollar show little reaction and remain close to recent lows. Housing starts contracted 8.5% last month. Economists surveyed by Wall Street Journal expected a 4.1% shrinkage. Investors are focused on the pivotal Fed meeting. A 25 basis point cut is priced in, while dissent is expected and economic projections should help guess next moves. Chair Powell's presser will be scrutinized for hints not only on policy but also the Fed's resilience to political pressure. The 10-year is at 4.026 and the 2-year at 3.516. The dollar index is flat. Bro, this is, I don't know what any of this means. I feel like I shouldn't even be reading this. I need to give this to somebody else to read. I think that's what I'll do for real. Bookmark this bad boy. Dollar's historic pattern unlikely to hold true if Fed cut rates. The dollar could react differently compared to historic trends following a potential interest rate cut by the Federal Reserve Wednesday. BNP Paribas strategist says in a note the Fed is expected to cut rates by 25 basis points at 1800 GMT. The dollar tends to rise in the months following a first rate cut if no recession emerges. supported by inflows into U.S. equities. In the case of a recession, the dollar usually benefits from safe haven flows. However, the dollar could fall this time if recession odds rise. It's now trading more in line with risky assets. Markets are increasingly sensitive to weaker than expected U.S. data and are more amenable to pricing in further front-loaded aggressive easing. Fed BOE decisions could have limited impact on sterling. Upcoming policy decisions from the Federal Reserve and Bank of England should prove temporary distractions for sterling investors. Monex Europe analyst says in a note, the Fed is expected to resume cutting interest rates at 1800 GMT with a 25 basis point move. The BOE is seen leaving rates unchanged Thursday. This isn't necessarily all that positive for sterling, especially versus the euro, given the UK's poor fundamentals compared to the eurozone, they say. This should remain the focus going forward, they say. The UK's economic weakness and fiscal risk could drag sterling lower over the medium term. The analysts add sterling falls 0.1%, that's 10%, or no, that's 0.1%, I'm an idiot, to 1.364, but raises against the euro, which drops to 0.2 to 0.0865 pounds. Man, I'm trying to get through this. I just don't know what the fuck none of this means. I guess there's not much left. Fuck it. Alright. Like, I don't even remember which one I just read. Actually, it was this one. Dollar could rise briefly if Fed fails to endorse a rate cut bets. 1016 DMT. The dollar could rise temporarily if the Federal Reserve refrains from signaling consecutive interest rate cuts at Wednesday's meeting. Monex Europe analyst says in a note, we continue to expect a restart of a sustained easing cycle, but whether the FOMC is quite ready to explicitly endorse such a rate path remains to be seen, they say. If the Fed's guidance is cautious, the dollar could extend its current small gains. However, any rise should prove brief, as the Fed will likely emphasize a weak labor market, the analysts say. Okay, I understand that. The Fed is expected to cut rates by 25 basis points at 1800 GMT. The DXY dollar index raises 1% to 96.769, the 2.5-month low of 96.556 on Tuesday. Dollar stays weak ahead of Fed rate decision. Okay, so this is like, okay, so they like cover it at times. Cause that's like what, 7 in the morning, I'm assuming? I don't fucking know. I'm lying. I don't fucking know what this means, bro. Oh gosh, I don't know what this means, dog. Not any of it, bro. I just read it all gibberish. Have no clue where I just was. Definitely wasn't there. Alright, I think I was here. Yeah, this is what I just read. The dollar edges higher but hovers near 2.5-month lows as investors brace for a widely anticipated interest rate cut from the Federal Reserve. The market prices at a 97% chance of the Fed cutting rates by 25 basis points and a 3% chance of a 50 BP, which is basis point cut in the decision at 1800 GMT. What is, I gotta look this up. What does this mean, bro? Okay. So that's where it is. Greenwich Mean Time. Well, why don't they put a fucking date? I mean, I figure. Okay, I'm still retarded for that. All right, whatever. A larger rate cut would put significant pressure on the dollar. Commerce Bank's Tulane Nagin says in a note, this is because inflation is rising and a larger rate cut could raise concerns that aggressive monetary easing is being pursued due to political pressure, she says. The DXY dollar index rate rises 0.1% to 96.745, but stays near a low of 96.556 reached Tuesday. Sterling looks vulnerable ahead of Fed decision. It's at 9:32. So what's the so that's 6 p.m. So that's a 4-hour difference. A 4-hour difference from where I'm at. Okay. Bro, these ghetto ass fucking Sterling looks vulnerable ahead of Fed decision. Sterling looks vulnerable even through this week's UK inflation and jobs data further diminish the odds of further interest rate cuts from the Bank of England. Convera strategist Antonio Ruggiero says in a note, structural headwinds persist for sterling and it risks falling. Federal Reserve cuts interest rates as expected, but delivers cautious guidance in the decision at 1800 GMT, he says. Which is Greenwich time, which is fucking 2 o'clock here. The Fed could reaffirm that it's willing to cut rates, but remains uncertain about the path ahead. The price pressures remaining a very real concern. In that case, sterling could fall back below $1.36, he says. The Fed is expected to cut rates by 25 basis points, while the BOE is seen leaving rates unchanged on Thursday. Sterling is steady at $1. Like, how do you have, like, how, like, this is what confused me about all of this. It's like, I mean, I know that's how, like, stocks go, I guess, but just why? Why so many, like, why don't you cut the decimal point to here? You know? These ghetto ass headphones, bro. I need to play something. That's why I usually have something playing. I could throw some music on, but let me see what's going on. Oh, this is what we were just reading about. Okay.
Life is more illegal than you think.
The algorithm got me by the balls, nigga.
During a business,
By the bow.
Unemployment is still low. It's still at relatively low rate, but we're seeing downside risks.
Nigga, unemployment rate low for white people, motherfucker. It's as high as it's been since 2017 for black niggas. Bitch, why don't you mention that? Oh, I know. I know why you don't, motherfucker. Bitch. Fucking Fed pound. Listen to this.
How do you see that as more important than inflation, which has remained
Subscribers only mode? You're capping.
Well, I was saying
Fucking
that what's
Jew.
happening in the labor market has more
20
to do
minutes?
with immigration than it has to do with tariffs. That was the
Man.
So I wouldn't say that all of what's happening in the labor market is due to tariffs.
What a
You
motherfucking
clearly have a slowing
bitch.
due to immigration. You clearly have
That's why they have it. That's why they got it like that. So niggas like me can't go in
You know
there.
that because the unemployment rate has ticked up.
Fucking muck it up
So,
real fast.
So that's what I meant.
I would dislike it, but niggas
every
need this
year
kind of
since
info.
2015, the SEP has forecast that you would hit your target 2 years later. And this year, this SEP says you're going to hit your target 2 years later. 2% does not seem to be in sight. Does that suggest that the 2% target is not really achievable? And does this present any credibility problems for you in telling people that that's what you're going to do if you can never reach it?
Well, I mean, you're right. It does say we're going to get to 2% inflation in 2028, at the end of 28. But that's literally how you put the projections together. You're writing down a rate path, which is designed to create, over the course of the SEP, time frame, 2% inflation and maximum employment too. So that's all that is. No one really knows where the economy will be in 3 years. But the nature of the exercise is to write down policy that you believe would return to the 2% goal over at least by the end of the exercise.
Thanks so much, Elizabeth Schulze with ABC News. The latest inflation report shows that prices are still going up across key categories for many households, including groceries. What will the Fed do if prices pick up more?
So our expectation, and you can see this consistently through the year, has been that inflation will move up this year, but that the effect, basically because of the effects on goods prices from tariffs, but that those will turn out to be a one-time price increase as opposed to creating an inflationary process. That's been our forecast. Pretty much all the individual forecasts say that. We can't just assume that, though, right? We have to. Our job is literally to make sure that that is what happens, and we will do that job. Right now,
We hope
the
so.
situation we're in is that we see
Motherfucker.
inflation. We continue to expect it to move up, maybe not as high as we would have expected it to move up a few months ago. The pass-through of the tariffs into inflation has been slower and smaller. The labor market has softened. So the case for there being a persistent inflation outbreak is less. And so that's why we think it's time for us really to acknowledge that the risks to the other mandate have grown and that we should move in the direction of neutral. So what will we do? We'll do what we need to do, but we have two mandates and we try to balance them. For a long time, our framework says that when our two goals are in tension, and this is quite an unusual situation, how do we decide what to do? Because our tools can't do two things at once. What we do is we ask which is farther from, how far is each from the goal and how long is it expected to get to the goal. So, and then we think about those things and we see, as I mentioned, our policy had been really skewed toward inflation for a long time, really. Now we see that there's downside risk clearly in the labor market, and so we're moving in the direction of...
Nigga, I played Mineplex, nigga. You see what's going on right now? You're bugging. It's crazy.
So it's
We just saw a white nigga get MLK'd, bro. You telling me you're not tapped in right now? You're bugging.
Our rates so that we become more neutral, which presumably will be better for the labor market. You see.
Tell Samito open the damn beta.
So kids coming
Fuck,
out of college,
I tried.
Younger people, minorities are.
So that nigga open that shit. I fucking tried, bro.
The overall
What you want me to
job
say?
finding rate is very, very low.
What you want me to say, gang? Fuck.
Very low. So you've got a low firing, low hiring environment, and the concern
The
is
fuck
that
you been doing,
if you start
Arden?
to see layoffs,
Nigga.
the people who are laid off there won't be a lot of hiring going on, so that could very quickly flow into higher
My
unemployment.
nigga said Mineplex. He wasn't even
healthier
on the channel before.
Economy, healthier labor market, there would be jobs for those people. But now the hiring rate is.
You don't even know what I was on
That's
before.
been a growing concern over the last few months, and it's one of the reasons why we think it's appropriate that we begin to shift our policy focus toward a more balanced one.
Steve Leisman, CNBC. Mr. Chair, in the past, during rate cuts, you used the word recalibration. And I wonder if you pointedly did not use it this time. And in fact, when you said policy is not on a preset course, did you mean that as sort of the opposite of recalibration? Are we meeting to meeting, data point by data point? Are we in the process here of getting back to neutral? Thank you.
So I think we're in a meeting by meeting situation. We're going to be looking at the data. You know what? Let me say a word about the SEP really here. So we often point this out. What the SEP is it's an accumulation.
Come on, Plex,
of
open the
individual
fuck up,
projections
nigga.
of 19
Slow ass PC,
showing what
bro.
they believe at a particular moment in time to be the most likely path for the economy and thus the appropriate path for monetary policy as well. And as you know, we don't debate or try to agree on what that is. We just write them down and accumulate them. We do sometimes discuss them. And so we always say we're not on a preset path, and we really mean that. The actual decisions we make are going to be based on the incoming data, the evolving outlook, and the balance of risks at the time the decisions are actually made. So you will have seen that we have 10 participants out of 19 who wrote down 2 or more cuts for the remainder of the year, and 9 who wrote down fewer than, in fact, in a good number of cases, no more cuts. So rather than looking at, rather than looking at this as certainty, I would encourage people, as always, to look at the SEP as through the lens of probability. And so there are different possible outcomes and likelihoods rather than this one is certain and this one isn't happening. So that's what I would say.
Thank you for getting to my follow-up question, which was, is the dispersion in the outlook a sign of uncertainty of policy in the meetings to come? Thank you.
You know, it is such an unusual situation. Ordinarily, when the labor market is weak, inflation is low. And when the labor market is really strong, that's when you gotta be careful about inflation. So we have a situation where we have two-sided risk. And that means there's no risk-free path. And so it's quite a difficult situation for policymakers. And it's not at all surprising to me that you have a range of views. It's not so much about having different views for the path of the economy, but it's partly that. But it's also partly about what's the right thing to do in light of this, of the tension between the two goals. How do you weight them? How worried are you about one versus the other? And so it's
All right, how long is this shit
natural.
gonna
I think
take,
it would
bro?
actually be surprising if you didn't have.
As soon as I
pretty
start a
wide
chess
range of
game, they're
views
gonna fucking,
based on,
it's
you know,
gonna
in
open
this kind of
watch.
highly unusual situation, and we do. So, but you know, we get together, we discuss, we have a great discussion, and then we decide what to do and we act. But you're right there that it's a wide dispersion. I think that's understandable and natural in the current situation.
Hi, Victoria Guida with Politico. You've talked a lot about Fed independence and the importance of it over the years, but as markets have questions about what exactly President Trump's intentions are with the Fed, what would you point to as the things they should be watching to determine that the Fed is still making decisions based on, the economic outlook rather than political considerations?
Look, it's deeply in our culture to do.
I knew it. This
based on the
fucking.
income data and
Come
never
on.
consider anything else. That's just everybody who's at the Fed really feels strongly about that way. So, you'll know it by the way we talk about what we're doing, by the speeches that people give, by the decisions that we make. You'll know that we're just going to do that. That's all we do. And we don't frame these questions at all or see them in terms of political outcomes. I think when you get to another part of Washington, everything is seen through the lens of, does it help or hurt this political party, this politician? That's the framework. And I think people find it hard to believe.
Oh,
that is
interesting.
not at all the way we think about things at the Fed. We're taking a longer perspective. We're trying to, serve the American people as best we can. So I think you would be able to tell. I don't believe we'll ever get to that place. I would say we're doing our work exactly as we always have now, and people they're making their arguments, and we're having
My
a
chest
really
elo
great
is so
discussion
ass.
around these challenging issues. So
See the cases around Lisa Cook as being related to questions of Fed independence?
I see it as a court case that it would be inappropriate for me to comment on.
What did it say?
Thanks, Mr. Chairman.
Case that it would be
Related.
so.
Do you see the court case around Lisa Cook as being related to questions of Fed independence?
I see it as a court case that it would be inappropriate for me to comment on.
Oh.
Thanks, Mr. Chairman. Edward Lawrence from Fox Business. So we saw the preliminary benchmark revisions down 911,000. The revisions for June were the first negative revisions we've seen since December of 2020. How can the Fed base important decisions on rate and what to do with the interest rates on data that seems to be, as you've called it in the past, noisy?
So on the QCEW, the revision that we saw was almost exactly what we expected.
Oh, that's him and her together.
Expectation was. So, and the reason for that is for the last
Interesting.
there's been almost a predictable overcount, and I think the Bureau of Labor Statistics really does understand this, and they're working hard to fix it. It's got to do, of course, it has something to do with low response rates, but it's also got to do with what's called the birth-death model, because a good amount of job creation happens around new companies, and how many go out of business, how many are founded, and it's just really hard. You can't survey for that. You've got to have a model that predicts that. And it's quite difficult to do, especially when the economy is undergoing big changes. So, and they've been working on that and are making progress on it. But the data we get is still well good enough for us to do our work. To the extent we have issues around data right now, it's about low response rates. That's happened all over really. Response rates are just lower to surveys now, both in and out of the government. And it's no great secret. We want higher response rates, and we need those to have, less volatile data. And the way to get that is to make sure that the agencies that collect the data have sufficient resources to drive higher response rates. It's not a complicated problem, but that's what it takes. It's not a mystery. That's what it takes. The other thing I'll say, Edward, is in the case of the job creation, the response rate is quite low for the first month, or lower for the first month. By the time you get to the second or third month, you're still collecting responses for that last month, for that prior month, and you get to the place where the data are much more reliable by the second and certainly the third month. So it's not that we don't get the data, it's just that we get it a little later.
Well, for the benchmarks, if that holds, it's 51% of the jobs that we thought were there weren't really there. Shows a weaker job market coming into this year. If you had had that information, would it have changed your mind related to where the interest rates should be? Should there have been a cut earlier?
We have to live life through the window,
Damn.
rearview mirror, as you know, and all I can tell you is we see where we are now, and we take appropriate action, and we took that appropriate action today.
Thanks. Howard Schneider with Reuters. So, as you mentioned a minute ago, some margins of the job market would suggest that the slide's already happening. Black unemployment rate in August was above 7%, declining work week, difficulty among college graduates finding work, rising youth unemployment. Why do you think a quarter percentage point now is going to arrest that?
Well, I hadn't say that I thought a quarter point would make a huge difference to the economy, but you've got to look at the whole path of rates, expectations. I mean, our market works through expectations, right? So I think our policy path really does matter. And I think it's important that we use our tools to support the labor market when we do see signs like that. I did mention that. You see minority unemployment going up. You see younger people who are more vulnerable economically, more susceptible to economic cycles. That's one of the reasons, in addition to just overall lower payroll job creation, that shows you that at the margin the labor market is weakening. I would also point to labor force participation. Some part of the significant decline in labor force participation over the last year has probably been cyclical in nature rather than just the usual aging process. So we put all those together, and we see that the labor market is softening, and we don't need it to soften anymore, don't want it to. So we use our tools, and it starts with a 25 basis point rate cut, but the market's also pricing in a rate path. I'm not blessing what the market's doing at all. I'm just saying it's not just one action.
As a follow-up to that, the growth mix right now seems very concentrated in investment and on the consumer spending side in the higher income groups. Do you feel that that's an unsustainable mix for the economy moving forward?
I wouldn't say that. I mean, you're right. Those are two. We're getting unusually large amounts of economic activity through the AI build out and corporate investment. I don't know how long that will go on. No one does. In terms of spending, you saw that the consumer spending numbers were well above expectations, and that may well be skewed toward higher earning consumers. There's a lot of anecdotal evidence to suggest that. Nonetheless, it's spending. So, I mean, I think the economy is moving along. Economic growth is going to be 1.5% or better this year, maybe a little better. Forecasts have been coming up, as you can see. So, labor market unemployment is low. But downside risks, but it's still low unemployment.
Whoa!
So, that's how we see it.
What, gang? 1.2.
Hi, Stephanie Rule, MSNBC. Treasury Secretary Scott Bessent has
Come
said
on,
that the Federal
bro.
Reserve suffers from mission creep and institutional bloat. He's now calling for an
Dog.
independent review. Would you support an independent review, or are you open to any sort of reform in any areas of the Fed?
I'll play like fucking a game
of
or
course,
two.
I'm
I
not going to
don't
comment
know.
on anything the secretary says or really any other officer says. So in terms of reform at the Fed, you know, we just went through a lengthy and I think very successful process of updating our monetary policy framework. I would say there's a lot of work going on behind the scenes around the assets we have in the Federal Reserve Bank Federal Reserve System and at the board. Are they the right size? We're actually going through a 10% 10% headcount reduction through the whole Fed, including the board and all the reserve banks. The employment at the Fed at the end of that will be basically at the same level it was more than 10 years ago. So we will have had zero job growth for more than a decade when we're finished with that, and I think we'll probably do more than that. So I think we're certainly open to constructive criticism and ways to do our jobs better.
Not an independent review?
We're certainly open to, you know, to always trying to do better.
I gotta go, Archer.
Mr. Chairman, Neil Irwin with Axios. There's been some debate lately on whether AI is already starting to affect the labor market in terms of lower labor demand, higher productivity by contrast. Do you buy that? And if that is true, does that have implications for monetary policy setting?
So there's great uncertainty around that. I think my view, which is also a bit of a guess and quite widely shared, I think, is that you are seeing some effects, but it's not the main thing driving it. And so particular focus on young people coming out of college, and yeah, there may be something there. It may be that companies or other institutions that have been hiring younger people right out of college are able to use AI more than they had in the past. That may be part of the story. It's also part of the story, though, that, you know,
jobs literally like encourage you to use AI, like, bruh.
So it's probably a number of things, but yeah, it's probably a factor. Hard to say how big it is.
Damn, I get my kit, bro. I got a fucking.
Thanks, Mr. Chairman. What evidence do you see of tariffs and inflation?
Well, if you can take goods, just sort of the broad goods category.
Dog, are you serious?
Last year, goods inflation was negative. If you go back 25 years, that was the typical thing, was that goods inflation was, goods prices So that was not the case during the pandemic, of course. Goods inflation went very high, but we had essentially returned to zero or slightly.
We're not finding a fucking sword or an axe.
The past year is 1.2%.
Like,
for
real, bleed?
But it's a
For
big
real?
change. So we think, I mean, analysts have different views, but we think it's contributing, you know, 0.3 or 0.4 or something like that to the current core PCE inflation reading, which is 2.9%. So it's contributing. What seems to be happening is that, you know, the tariffs are not mostly not being paid by exporters, mostly being paid by really the companies that sit between the exporter and the consumer. So if you buy something and you sell it through retail or you use it to make a product, you're probably taking a lot of those costs on and not able to pass it fully along to the consumer yet. That appears to be what we're seeing. All of those companies and entities in the middle, they'll tell you that they have every intention of passing that through in time, but they're not doing that now. To the consumer, the pass-through has been pretty small. It's been slower and smaller than we thought.
Bro.
But the evidence it's very clear that there's some pass-through.
This is a fucking troll.
I also wanted to ask if you could share with us the conditions under which you might consider leaving the Fed in May.
I have nothing new on that for you today.
Hi, Katerina Saraiva with Bloomberg News. I just wanted to follow up on one of your answers just a couple minutes ago.
Oh my God.
We've often heard you talk about how you and your colleagues do not think about politics. This does not enter the room. But one of your new
This is literally a troll. I have to take fucking sticks.
World, right, where everything is seen through this framework
LOL.
of
A troll.
politics and of what party is being helped, and that person is still employed by the White House. how can markets and the public
Ain't no
interpret,
way I'm trapped in this bitch,
you know,
right?
some of his speeches, for example, and then some of, you know, the forecasts that we see today. I mean, the median for this year was
Wow.
moved because of the introduction of his forecast. I'm talking about the number
You're
of
kidding
rate
me,
cuts seen
bro.
this year.
Okay, I gotta fucking
What do you say to markets and the public
drop
that are
an
trying to
item on
interpret,
there.
you know, what you guys are saying?
So there's 12 vote, 19 participants of whom 12 vote, as you know, on a rotating basis. So no one voter, you know, can really, the only way for any voter to really move things around is to be persuasive. The only way to do that in the context of
Yo, this is nuts. Am I really trapped in here,
really
bro?
strong arguments based on the data and one's understanding of the economy. That's really all that matters.
Yo.
And that's how it's going to work. And I think that is the way the institution, that's in the DNA of the institution. That's not
Bro,
gonna change.
what?
And then I wanted to ask about a Gallup poll.
I'm
that
not
showed
retarded,
that,
right? Like, I'm...
Americans now have more confidence in the president than the Federal Reserve when it comes to doing what's
Like,
right for
what
the economy.
is going on?
Why do you think that is, and what's your response? What's your message to the public?
Our response is we're going to do everything we can to use our tools to achieve the goals that
Yo,
Congress has
this
given
is
us.
crazy,
And
bro.
we're not going to get distracted by anything.
I don't have a fucking
that's
weapon.
what we're gonna do. We're just going to keep doing our job.
Oh my gosh, bro.